Nicholas says, "Hey, Robert and Austin, just wanted to say I am super grateful for you two and all you've taught me over the last few years since I found your podcast. My name's Nick, I'm 27 years old, and I'm married. I just barely passed the six-figure mark at my day job, plus I've got a side hustle that generates $600 a month, and I help my wife with her cleaning business that generates another $1,200 a month after taxes. I currently have $65,000 invested into index funds in my retirement accounts and a small amount in cryptocurrency as well as some real estate. We have $250,000 of equity across 3 rental properties and our primary residence that we've built up by house hacking. All the rental properties are break even, but they appreciate very well because we live in a state with a very strong economy. I love real estate and would love to invest full time once I build up my portfolio, focusing on carbon neutral investing. My question for you is this. As personal finance experts and entrepreneurs, should I still be fairly conservative by investing in index funds in crypto, or instead of going all in on those and letting my rental properties kind of just do their thing, should I flip the script and go all in on acquiring more rental properties and diversifying more into real estate until I've built up a wonderful portfolio? I'm pretty close to my investment base of $100,000 like you recommend, but pulled money out for our last down payment, and I'm just wondering what you think that I should be doing with all this real estate. Robert, I'll let you kick this one off.
Yeah, I love this question from Nicholas, and I think you've already answered the question. I think you need to build up your base further because you're not really well diversified. I think you guys are crushing it, obviously at 27 years old, but I would do both. I would maybe pause the investing in the real estate right now or slow it down at least. I would invest more to get your base built up. You've got the $65,000 right now. I'd maybe get that to $200,000, $250,000, then reinvigorate and buy more real estate. But I definitely like to see diversification. I've been around long enough to see many, many ups and downs in the real estate market, whereas even Austin or yourself have not. And so I would hate to be so fully immersed in real estate that if there were a big correction, and let's say housing prices came down 15 or 20%, that a lot of your equity gets eaten up there. But also you have to look at it that equity is dead money essentially right now until you sell the property. Now, you pointed out that you had great capital appreciation, which is really, really awesome, but you're not very liquid. And so I'd like to see you build up your base further, get to $200,000, $250,000. If you find a real estate project in the meantime, great, go for it. But what I don't want to see you do is continually save and spend, because you're never going to get that liquid base built up to give you the diversity that I think you need.
I'm right there with you, Robert. I think a mistake people make, and I see this a lot with people who are really excited to pay off their home, right? They go, okay, I've got a couple $100,000 invested in the markets, but I spent the last 9 years paying off my $700,000 mortgage. So now I've got, way more money in real estate than I do invested as it relates to my net worth, right? So let's say you have $1 million net worth, you have $700,000 of equity in your home and $300,000 invested in retirement accounts and no debt. Well, congrats, you have no debt, which is cool, but on the same token, you are way over indexed to real estate. And I'm not saying Nicholas is in a bad spot by any stretch of imagination. You're doing wonderful for 27 years old to have all this money invested, all these properties, all this, you're crushing it. But I agree to what Robert's saying in the sense that you've already got such a head start on the real estate side of the equation that it's time to begin to catch up a little bit on the investing. So I'd love to see just as much as you have invested in real estate, this $250,000 invested in index funds, right? So you're at 65 right now. What is the plan to go from 65 to 250? So you're a 50-50 split asset-wise, 50% real estate, 50% stocks over the next, let's call it 3 to 5 years, and then really begin to say, okay, great, I've got my base built, I've got my index funds, I've got my dividend ETFs and my single stocks and my crypto and my emergency, all this fun stuff, and I've got some cool real estate. I would hope the next logical step is to say, okay, how do I now either one, make the real estate I own at the moment start cash flowing, because I think that's very important, or two, how do I now focus more on cash flow real estate? Because to Robert's point, this $250,000 of equity is dead money. I mean, yeah, it's growing. Don't get me wrong. It's wonderful. But you don't see it unless you sell the house. And that's a whole other, 4, 6, sometimes 9-month process, depending on what markets you're in.
Yeah, I love that takeaway, Austin. And one more little quick story for Nicholas G's question. And that is, I remember vividly back in 2009, 10, and 11 when the housing market really crashed. And I'm not saying that could happen again, but I'm just telling you a story. And that is, I had so many wealthy friends that as soon as that happened, they had to sell the Bentleys, sell the mansions, sell the boats. And then all of a sudden they were starting from zero again because all of that equity and all of that wealth that they thought they built through real estate evaporated. That's why we love to speak diversity. A lot of people call me out online and say, oh, you should go all in on one thing. And those people don't know what they're talking about. Because I will tell you, some of the most successful people I knew back then in 2009, 10, 11, 12 got wiped out, and it took them a decade to recover. It happens all the time when you lack diversity. So everyone listening, everyone watching, please stay diversified. It is ultimately important to make sure you can sleep well at night, and one sector having a correction cannot wipe you out.